Bear markets are terrifying, and the value of all financial assets appears to be plummeting. People are racing around, and fear, turmoil, and uncertainty can be found everywhere. I recently noticed a tweet thread from Raoul Pal, the founder of Real Vision, in which he clearly defined a lot of what I'm thinking, and I thought we might talk about it. Raoul Pal tweeted, "Yes, there's a Bitcoin revolution, but there is a digital asset revolution going on that is beyond incredible. It is very early days, like BTC in 2013, but it's happening. Some will be on the BTC blockchain, but the vast majority will not be. As I've talked a lot about, I think we are going into a pretty nasty recession, or are in one. Layoffs are coming as our house price falls. Demand destruction is everywhere due to the largest monetary tightening in history. The equity markets, as I have pointed out in recent tweets, have priced this already. The credit markets are beginning to price this, and copper is doing its job. It's the UI rate of change of these assets you need to look at. The bond market and oil are the two assets not pricing in future recession yet. Due to the supply issues in energy, bonds finally decided to join the party, and the trend of higher yields, lower equities has probably ended. Lower stocks now equal lower yields. The final show to add to this will be oil. I think it breaks lower. Bond yields falling and oil falling will give the excuse to the Fed to hike in May and then pause, or do one more in June. The bond markets will begin to price it out. However, the next 4 weeks are going to be highly unsettling as every position gets taken out and shot. Something I've been warning about. There will be no safe place to hide, except bonds, but most people are short those. Liquidation rates large. Crypto is in full panic mode. All the monkeys are flinging poo at each other, or at me, on Twitter, and that is a sign of approaching the lows. March 2020 was very similar in levels of fear, anger, vitriol, shock, and panic. June 2021 was less. But, as I have pointed out time and time again, crypto is a long-term investment for me, not a trade. In the thesis is clear expectations of 60% corrections, which I have discussed at length. Without that kind of volatility, you don't get the exponential upside. If you zoom out from the forward, you get BTC as a proxy for the space overall heading back to its long-term exponential moving average. Tough times like these are the times to buy. If you have any spare cash, not easy these days, and sentiment is so bad that just by writing this tweet of my thoughts in order to help people, my comments section will be full of personal attacks, vitriol, and anger. I'm sorry you feel that way. Bear markets and recessions are hard and are scary, but they give huge opportunities. Keep calm and carry on. Stick to your framework. Relentlessly test your hypothesis and keep an open mind. Filter out the noise and focus. Opportunity comes out of crisis. I'm looking to add to Ethereum and getting wildly bullish bonds, and I'm averaging into high beta growth. Whatever happens, there's a lot of good advice in that Twitter thread. The louder the fear, the more the uncertainty and instability, and the greater the opportunity. Controlling your emotions is one of the most difficult aspects of investing. When everyone else is worried, you have to start being greedy, and ultimately, what we're seeing is that markets are full of sheep as people become more and more afraid of others, creating a negative feedback loop. In the end, I don't believe Bitcoin or other financial assets will continue to decline in value indefinitely. The question is, when will the agony end? And no one knows. But one thing you can do in every asset class, be it real estate, equities, bonds, crypto, or anything else, is to have a long-term view and ensure that your financial portfolio is durable. Please make sure to subscribe to our channel and click on the notification bell for upcoming videos. Thanks for watching.